So the tax advisor said that I make pretty good money, that I should be able to do both.
Yeah, your tax advisor's an idiot.
You just heard Dave Ramsey give some of his most dangerous and incomplete financial advice, and I'm going to show you exactly where he made a grave and expensive mistake for this person. But here's the thing, even though he is wrong, even though I am going to do the math, and you are going to do the math at home, there are still going to be millions of people who are still going to follow this man. Why is that the case? I'm going to show you that as well here in this video. But first, what is going on? I'm going to react to portions of this video, show you exactly how and why these mistakes were made, and why you probably don't want to listen to people who do not listen to you and your scenario. Let's go ahead and break down these clips. So I can't play the entire thing. YouTube blocks it, and or Dave Ramsey will block you. That is a thing that does occur. So again, we'll play clips of it here just to give you an idea of what is going on, and I'll show you the pieces that are missing. So let's start off with who she is and kind of what's going on here. You can also see on the screen.
I was contributing 8% into my retirement account so that I could get a 4% match. However, of course, your program had said to not contribute because you got to maximize your income to pay off your debt.
Mm-hmm.
All right, so she contributes to a 401k. She has 8% that she puts in, and she gets a 4% match. Now, throughout the entire video, she says that she makes $150,000. All right, she has a daughter, and they have split custody, which is something that she mentioned. She says she's a nurse, also took additional notes. She lives in California. What do we know about California? We know that there are high taxes in the state of California. She also says that she is 53. Now, those are the things that we know. What are the things that were not said? That if this person were in front of me in a client meeting, that I would need to ask, that were not stated. Well, again, she said it was split custody. She said that she had a daughter, but one, I don't know the daughter's age, because what if you're paying daycare? That's an expense. How expensive is daycare in California? I don't know. How much are you spending in general, but how much is rent? Do you own? I don't know. How much do you have in savings? Now, because it's Dave Ramsey, I know that at least she's on step 2. I know step 1 is at least have $1,000 in savings. But if you're in California, you might need a little bit more than that. We don't know how much she is saving. We do not know what her expenses are. Because we do know she's 53, I don't know how much she's been saving in the past. That's also important, because if you tell me this is your first time investing and now you are stopping for 6 months as of right now, you might be a little bit behind and you might want to catch up, and 8% might not be enough. And stopping for right now 6 months might be more costly than you think. There's a lot of missing information here. Right? He didn't ask none of those questions, but specifically the expense piece is a bit concerning, because if you're trying to pay off debt, I get that, and you should try and pay off debt. I'm clearly not against that, but you're already 53 and you still need to invest, but at what cost here? And is there some expenses we can lower? I don't know. We don't know how much you're spending, all right? So keep that in the back of your mind. How much are we actually spending here? Why don't you ask that piece of the question? Okay, so let's go ahead and continue here.
I was at 120, but I'm now at 150.
Amazing. And so when will your little $23,000 debt be paid with your big $150,000 income?
Okay, so that part right there was a touch condescending. I understand that if you have $150,000 at $23,000 doesn't seem like a lot. But remember, again, California taxes are no joke. Childcare expenses are no joke. There was a split custody situation, and that is extremely important, because if you were married and you were divorced and you now have $23,000 of credit card debt, which is what she specified, I'm not sure if we played that in the clip or not. Yes, that is also expensive, right? The credit card debt. We don't know how or why she's in the credit card debt. Most people just assume you had bad habits, you were overspending. We don't know that. We actually don't know that. It could be a health issue. She could have had a medical bill, and that's what she used to pay the credit card, pay with a credit card. It could have been y'all were living in the same house together, y'all split, and because now you don't have 2 salaries and it's only 1, that could have been how you funded things, just to keep things together, because the budget doesn't line up anymore. And now she took on extra hours to try and balance those things out. We don't know. He did not ask how the credit card debt got to where it is. We've talked about this before where people have been laid off, and that is how they got into credit card debt, not because they were just acting a fool and swiping the card left and right. Because we don't know the bills, you can't just say the whole $150,000 is just free and clear. It is likely much lower than that, and the gap between the income and the expenses could be large or it could be small. We do not know here. And the way he said it, not the biggest fan, but hey, let's continue anyway.
Well, that's just this year, because since May I've been working overtime.
Mm-hmm. When will your $23,000 be paid off?
Well, my strategic plan is hopefully in a year if I just keep this Giselle.
Why would it take a year to pay off $23,000 when you make $150,000?
Why would it take a year to pay out $23,000 when you make $150,000? Maybe because you have other expenses there. Like, let's ask and see where the money is going before we ask those questions. If you have $2,000, $3,000, or $4,000 of free cash flow, fine. Is there a car that perhaps needs to be sold? Okay. Is there a ton of food that you're going out and spending like crazy? Is there vacations that maybe need to cut back on? We don't know. We do not know. If you're assuming that she is spending out of control, that is a you problem. We do not know that. What if the kid has special needs and that is where the money is going? You don't know. What if it is student loans? You do not know. And he did not ask. This is why the assumption of just, hey, I don't know why you can't do this in 6 months. Maybe because you don't know how much he's spending. These are the questions you need to ask if you are a true financial planner or just a real financial expert, as opposed to just doing these things for clicks and guiding people. Like, these are extremely important questions, but it starts to get downhill here in a sec.
Oh, should it take less?
Yeah, 6 months.
Okay, so now we got that out of the way. Let's skip forward here.
Putting in your 401k.
I was putting 8%.
All right, so she puts in 8%. Now remember earlier, we know that there was a 4% match, all right? So that means that you get 12% total. For an entire year, you put in 8%, your employer puts in 4%, that's $18,000. $18,000, you do the math yourself, $18,000 on a $150,000 salary. Now I want you to listen to what this man says.
8%. So $8,000.
$8,000. Where are we getting $8,000 from? That's $10,000 off. Where is $8,000 coming from? There is no, I'm sorry, I need to repeat that. Where is $8,000? There is no $8,000 anywhere, in no way, shape, or form. Like, that is a major mistake. We're talking $10,000 off, and everything that he starts from here is off by $10,000. That is a ton of money when you're trying to pay off $23,000. So watch how this begins to spiral here, right? Watch.
Taxes on $8,000, you would be saving $2,000.
Okay, now here's how he gets that number. Okay, so if you have $8,000 and you put in 401k, that's tax deferred. You're not paying the taxes. All right, now he's estimating here about 25% taxes in general. So you save, right, $2,000. So I get the $8,000. Let's say I avoid putting the money in 401k. I get taxed 25%. I get $6,000 in my pocket. That is how that would work. I get an extra $6,000. However, that is $6,000 for the entire year. For the entire year, I get an extra $6,000. Remember, that's 8% per year. Keep that in mind here. Keep that in mind. $6,000 based on his math. Based on his math here.
Oh.
So all of this discussion is about $2,000. Well, you make $150,000. Oh, and by the way, it's not even really $2,000 because you need to roll up your sleeves and get this done in 6 months. So it's $1,000.
Now, all right, you see that? You see that? Now he went from the $2,000 savings down to $1,000, which now means what? Okay, so it now means instead of the full year, the full $8,000, well, if you just pay it off in half the year and you stop contributing for half the year, then actually the savings, right, you cut it down, right? So instead of $8,000 the entire year, it's $4,000 the entire year. Instead of the tax savings that you're putting it inside the 401k for, right? Instead of doing that, instead of the $2,000 savings, it's $1,000. But now here's the problem. This whole thing here is to do what? To pay off credit card debt of $23,000. So if you tell me to stop contributing to my 401k to pay off credit card debt, and I'm supposed to get the $4,000 now, right? Pay 25% taxes. That leaves me with what, $3,000 now, right? Yeah, that leaves me with $3,000. I'm gonna pay $23,000 of credit card debt with $3,000, and I'm gonna do it in 6 months. What math is that supposed to work with? And not only does that part not make sense, it was $18,000 that you were costing yourself to begin with because it was based on $150,000 here. So telling her to stop, hey, you don't contribute to your 401k, what really happens if she did this, in reality is she stops contributing. She doesn't stop for 6 months because guess what? She said, oh, I get an extra $3,000 this 6 months. Well, actually, I need to keep going. And then it's 1 year, 2 years, 3, 4. How many years does it take you? Right? We're talking, what, closer to 5 years? If you get an extra $3,000, assuming your salary doesn't increase. That's what actually happens. And you miss on 5 years. So you're 53 plus 5, now you're 58. You're closer to 60 now because you were not contributing. That is what happens when you could have been putting it in closer to $18,000 per year. That is why it can be extremely dangerous. Because his math was off, it causes you to lose tens of thousands of dollars in matching contributions, not including what the stock market could have grown to. What is the solution? Well, as I've said before, one is asking more questions here, because I've said if it's credit card debt, depending on your habits, I would ask like, hey, where did the credit card debt come from? How did we get it here? Right? If it's a habitual thing, overspending, not having a budget, let's get the budget together, right? Let's see if we can negotiate the rate lower. If it was a one-time circumstance, maybe we can, again, negotiate it. Or if it's, a one-time thing, maybe we can move it over to a zero-interest credit card and then continue creating a plan to just pay it out straight up, right? Or even better, why don't we just lower the contribution for a short period of time, go from 8% to 4% and just give yourself just a little bit of cash now. But to stop altogether when the math doesn't add up, you're really only giving yourself $3,000 for 6 months. That doesn't make too much sense. That literally does not make too much sense. You cannot pay $23,000 worth of debt on $3,000 per year, especially when you do not know what else is in the budget. We do not know. We don't know what is required. We don't know if it's medical bills, student loans. We do not know what else is there, and that is the main concern here. He didn't ask any of those questions. But given all of this, like despite all this, why do so many people continue to follow him? It is because of this. Debt has a psychological pressure. It is something that is relatively guaranteed. Not that you're going to have debt, or that you have to have debt, but it is you know it is this amount, and if you pay, it is going to go down. You can plan for it. You can schedule by it. That is what we know about debt. I know that for a mortgage, which is debt, right? By year 30 on this month, I can pay it down. If I can game the system, which you can do, right? I know that it can be paid down by a certain time. That is the beauty and the horror of debt, is that it is a guarantee. Investing is not. Your retirement is not. You put money into it. Yes, you can get a match, which is technically a guarantee, but you don't know how the market is going to perform this year, today, tomorrow, or 10 years from now. And that's the difference here. We go for the guarantee, even if it hurts us. And that is what is happening here. That's what he is preaching and telling people right now. Don't go for the future that you need, even though you're 53. Even though you're 53, forget all that. Go and pay off the debt. And if it don't work, what happens then? Because based on his math, I don't know if he even sat there, because you're not getting the full $8,000. Based on him, you're only getting the $6,000. At no point do you say, well, wait a minute, only at $6,000. Like how long, how many years was it gonna take you at $6,000? Even if I gave him that at $6,000, how long was it gonna take you to pay off 23? We don't know. And she already said, in the full clip of the video, her hours do vary. So it's not guaranteed that she's gonna continue to make 150 to begin with. These are the issues that can cost you when you do not understand who you are listening to. But most importantly, tailoring your plan to what is actually going on. I'm not telling you not to pay off your debt. You absolutely should. But you gotta understand balance. And what you don't wanna do is be so focused on debt that you hurt yourself. Because you cannot go back in time. You cannot go back in time and say, oh, I wish I could have at least gotten that 4% match. I want you to have balance in your financial life. You deserve to have balance in your financial life. I think that is the thing that you should have and you deserve, rather than something like this. You want to learn more about personal finance, about money, from someone who actually knows how these things work. You want to go to buildingbread.com/callkev and then check out these videos right here.